Yo, what's up everyone? It's your boy Looney. Today we're talking about a trade I might actually run tomorrow, and it's called a call credit spread. I'm going to show you one on SOFI and why the strategy makes sense when a stock is running hot and nearing resistance. Before we jump into it, quick shout out to the Discord, free to join, but if you want real-time trade alerts, coaching, or my course, that's in the premium membership. It's $8 a month. Links are in the description. Now, let's get into it. So what actually is a call credit spread? Let me pull up SOFI right now. And in short, it's a bearish to neutral options strategy. You're betting a stock won't go above a certain level by a certain date. So if I go to trade and we were to go open up a call credit spread, you can see here, it goes over what it is. You can also, I think there's also a way to read about it. This might be the way to read about it, but yeah, I think you have to do it this way. Let's see. Yeah, you hit this question mark and it goes into depth on Robinhood itself. But in short, you're selling a call option that is out of the money. Or in this example, I'm going to be selling a call that is out of the money and then buying a call option further out of the money. So I'm going to show you exactly what I mean by this. And doing this, it creates a spread and it limits your max loss, but it also gives you premium upfront. And why am I choosing SOFI on this position? For a couple reasons. One, this stock doesn't have any earnings, so there's not kind of anything that can get in the way of volatility. And also, if we pull up VIX, because VIX is a good way to understand volatility. It is down today. It's at 18. And usually when it's under 15 is when we are pretty greedy with things, but that 18 is kind of in the middle, a little bit higher than the middle of the average. But SOFI itself is getting closer to the Bollinger Band, the upper Bollinger Band, which is a good indication that the stock is ready for some kind of pullback. Because if you notice in this Bollinger Band that when it tends to go out of these two lines, it's two lines on the outside, that like blue cloudy look. Once it goes on the outside of these, it tends to come back. And this is not only with this stock, but it's every position. Bollinger Band is a great indicator to understand where the stock is heading. And also, it's not above it, but it is close. The other one I want to go over is RSI. If RSI is over 70, that's another indication that things are overbought. So what I'm going to do is sell a call credit spread. So when you're seeing that it's a overbought or at least due for a pause or a pullback. So I don't hate SOFI. I don't think it's a bad position, but this is just a short-term trade and not a long-term bet. So let me actually open this. We're going to go to trade options, and we're going to go a little bit further with this one. I usually do 1 to 6 weeks, and I think this is a 5-week one. So you're going to go sell call, and we're going to do one that is out of the money. So I'm going to go to the 16. It has a low delta. It's a 0.2 delta, very safe for trade. It's not entirely safe. There is some risk to it. And we're going to hit this plus sign. Now, after you do this, you're going to switch over to buy call. And then we're going to move up to a further out of the money position. Now, this isn't the most important part of this step. You could do one that's just right here, and it is $4 and your max loss is $46, but I'm not sure if I want to do that sort of position. I think what I'm going to do is go to this $10 one. So buy call $10. And now with this, you can see my max profit is 12 and my max loss is 138. So the most I could lose is 138. And the way I lose that is if the stock goes past this middle point, the 16.15 or 0.12. And that's okay with me because I own this stock. I have a buy call. So I have a lot of long-term plays on this stock. So if I do end up going past this price, I am okay with it because I'm hedged. But with this, you're going to hit continue, and I'm probably going to open up 2 positions. This way, I at least can work with something. If it's just $15 max profit, I'm not sure if I would want to do this kind of position if I'm just doing 1 contract, because I do plan to close this early, and I'll probably close this if I see a good time. And it might be 1 week before expiration. It might be first week of opening this position, but this spread, it's a very long spread. Let me actually do it one more time just so we could actually see it queued because it's not market open right now. Oop, I keep pulling up Riot. Let me find SOFI. There it is. And trade options, go back to that July 11th sell call. We're going to go to 0.2, and then buy call, we're going to go up to this $10 one. So let's go like this, goes 2. And you do need to use $70 to do this type of trade, or at least these amount of contracts. You're going to hit review, swipe up, and it is good to go. It's done. It's queued. It's not actually market open, so it didn't go through. But this is about a 1.5 spread with around $15 in premium per each one. And the max profit was 30 and the max loss was 270. So I'm essentially risking 270 to make $30. And that is not a bad trade-off if I believe SOFI stays under that $16 mark. So why do I like this trade? Why is it a good trade in my portfolio? It's a defined risk trade. You can see there's a max profit and a max loss. It can't be an unlimited loss. I'm also using the chart. So we saw again, SOFI was approaching that upper Bollinger Band. And if the stock drops tomorrow, market open, I might not do this trade. But if it keeps running up, it might be a good time to actually do this trade. And we can see once again, close to that upper Bollinger Band. And it lets me profit if SOFI stays flat or even drops slightly. I am doing covered calls as well, so I'm also hedged in that position. But the credit spread just gives you that extra boost. And I'm not really trying to time the top. I'm just playing the probabilities and get paid if SOFI cools off. And again, it's not interfering with earnings. If we go down to the earnings down here, it is projected on the 29th of July. So I wouldn't actually do this trade on earnings just because it is a play that you don't want the stock to move too much. You don't want SOFI to go up too much, and you have to manage this trade. So I only use credit spreads when things line up technically and emotionally. I'm not going all in. You can see I do have cash still, and I'm sizing pretty small. 270, at least in my portfolio, is small. I know for others it might not be, but just be careful with your position sizing because I might need to close this for a loss if it does not go in my direction. But again, if it doesn't go in my direction, that's actually okay because I do own 400 shares of SOFI and I have a long-term buy call. So I'm very bullish and I do have bullish strategies on SOFI. If you want me to break down the full trade when I enter it, or just want a deeper dive on how to pick strike prices, drop a comment below, hit like, and join the Discord. Until next time, peace.